Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is July 19, 2023. We had UK CPI inflation, which came in lower than expectations. That had sent the pound versus US dollar sharply to the downside. Let's take a look at that currency pair from a technical perspective after the drop. Starting at the daily chart, the price, I recall from previous videos, the price came up to test this swing area through here, where the price either had a floor or a ceiling. We came up to the low of that swing area in trading last week and in trading this week as well, including yesterday. Price moved up toward the low of that at 131.46, and that started it kept a ceiling on that pair, and the price started to move to the downside in trading yesterday. Looking at the hourly chart, this is what it looked like. On the hourly chart, we fell below the 100-hour moving average yesterday. Also fell below this swing area in the short term, where we had different swing lows through here, forming, trying to form a bottom here and push back higher, but it couldn't. And then that level became resistance through here in the late trading hours yesterday. In the Asian session today, the price started to move even lower, tilting the bias more to the downside with risk of a move back above this level, back above the 100-hour moving average. CPI data came out, and we saw the big sharp move to the downside. What is interesting, or what traders jumped on, was at the rebound off of the initial low, which, by the way, came down to test the 38.2% retracement of this move to the upside. The rebound came up to test the 200-hour moving average. That's the green line in this chart right here. As you can see, we came right up toward that level, found sellers, and the price has since pushed back to the downside. The high price came in near the 1.2972 level before it rotating back to the downside. Our low for the day just reached a level of 1.28966, just below the 129 level. We're currently trying to back up a bit, trading at 1.2909 as we speak. This underside of the trend line is in play, and then the 38.2% retracement. I would expect that the 38.2% retracement would be the sell zone on a rebound to the upside for those traders that wanted to get in, and a barometer, I guess, for buyers and sellers as well. Stay below that level, and the sellers remain in control. Of course, the initial move to the downside here off the CPI data did find support against that level, so I would expect sellers against that level if the sellers are to remain in control. So there you have it, a look at the sterling versus US dollar from a technical perspective after the lower than expected CPI. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.